DEXs, aka decentralized exchange. Today we're going to look at some of the biggest, largest market cap DEXs: UniSwap, PancakeSwap, some of the Cardano DEXs, Ardano and Adax, and then some of the more newly launched DEXs, Astro and WagyuSwap. I know Wagyu's on the Valas, but we're going to look at those today. We're going to get some perspective today, and then we're going to do a deep dive on technicals on the first one, which is UniSwap, what's happening right now with the markets and what we should anticipate next. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, I'm on Coin Market Cap. We're on UniSwap. UniSwap's price is $10.45. The market cap is 6.5 billion. Trading volume is 115 million. But if you look at all-time data with UniSwap, all-time price data, what we're going to do here is want to get perspective, because I know there's a lot of FUD, which is fear, uncertainty, and doubt. But we've had, if I just scroll down a bit more, back in, what was it, October, November, we had a massive surge with UniSwap, right? And now we are looking like we've got a big correction. You know, now in hindsight, it looks like an ABC correction. Very deep, very, you know, people are like, how come it's going down so much? But this is one of the biggest players, and the market conditions are not optimal. So even UniSwap is going down, down, down. We're going to do a deep dive technical at the end of this video on UniSwap, but I just want to give a high-level overview on DEXs. What is happening right now with DEXs overall, with the entire market? So look at this, right? The all-time high, if I just scroll down with Coin Market Cap, let's go to all-time high. Where are you? Let's go show more. And we want all-time high for UniSwap is $44. So it's 76% down from its all-time high. And that's UniSwap. Yeah, the main DEX for the Ethereum blockchain, the most popular blockchain, UniSwap, right? Really, really important to get perspective, because most people don't have perspective. So now let's dive into PancakeSwap. You know, it's got massive popularity, especially because it's cheaper gas fees, faster than Ethereum, and it's been massive for, especially for retail. But current price is $7.28, right? Market cap is $1.9 billion. Man, that is down incredibly. The volume is almost the same as UniSwap, 136 million. Let's just go to the all-time high first, then we'll look at the chart. And again, I'm just doing it from CoinMarketCap just to kind of give more about perspective. All-time high was $44. PancakeSwap, the biggest DEX for the Binance Smart Chain, a very popular blockchain, is 83% down. Look at that. You can see that there, 83% down. That's perspective. So if we look at the price, again, I'm just doing it in a fast, easy way over here today, because we're going to do a bit of a deeper dive on some other things today, is in PancakeSwap terms. Let's just scroll down a bit. When was this? This was around, what was the date here? The date here was, what's this? Is that this year? That's last year. Yeah, January last year. Sorry, a year ago. PancakeSwap was flying, right? Flying. Let's just put this up here. I'm just going to zoom in a bit more here. Okay, do you know what? I'm going to just going to shrink myself. I'm going to shrink myself a bit. There you go. Bang. All right. PancakeSwap. Let me get this up. Massive move to the upside. Bullish behavior. We had a big first leg down. Bit more of a pullback. And then another leg down. You know, this is like it's gone below this point. And it's 83% down. That's PancakeSwap. One of the biggest DEXs, decentralized exchanges, in these current market conditions. So why do I believe one of the reasons this is occurring? Well, if we just look at Bitcoin, right? We're just going to dive into Bitcoin. I've done a macro thesis on Bitcoin, and I did, you know, analysis the other day. You can see the video, you know, just my thoughts and opinions on Bitcoin, what it's doing. And we've been pegging the highs and the lows since April last year. But mainly, the main thing I wanted to get across is when Bitcoin is doing this movement to the downside, it panics the entire market, especially medium and low caps, especially low caps, right? So if it's impacting UniSwap and PancakeSwap, well, what do you think it's going to do with some of the other DEXs? So next, what we're going to do is we're going to dive into some of the Cardano ecosystem. So I'm on Cardano, was it Cardano Cube? CardanoCube.io, and there's Cardano DEX projects. There's a few of them over here, but we're just looking at the ones that have tokens at the moment. So Adax is a very popular one that has a token, and Ardano, you know, has a bit more volume. So if we look at the price action with these, because Cardano is a really big ecosystem, it's currently 0.49 cents. So if I just click on all with Adax, you know, I was looking at a particular chart pattern with Adax not that long ago, and it's looking quite healthy. But let's just look at the current market conditions. With this move to the upside, when I saw this, I said, okay, in comparison to any move over here, it's actually bigger, which is referred to as an overbalance of price. Overbalance of price. This looks like a very clean ABC correction. I cover Elliott Wave and Fibonacci. I do a lot of Elliott Wave to read the markets. I'm going to cover that in a bit more detail. But if you want to learn it, you can take my masterclass. It's in the link below. But with this more recent movement, I had this move up. But look at this heart. Look at this here, right? This is scary. The way the dumping is occurring with DEXs as a whole. So if I just click onto his coin market cap, if I just get rid of this, look at this. This was with Adax, right? Adax. Just wow, look at this. This is very, very steep. So from its all-time high, and again, this is about perspective because I'm listening to your comments. I'm listening, and I'm going, maybe people are not looking. With UniSwap, with PancakeSwap, all-time high with Adax was $2.42, and it is also to the nearest one over here. You can see it clearly, 80% down, 80% down. So it's no surprise that we're probably going to see the next one, which we're going to look at is Ardano. Ardano is $1.91, 16 million market cap. Trading volume is 500,000, so it's not that much trading volume. We just click on all. Again, very similar price action that we're seeing. If we just scroll down and we look at the all-time high is $10.84. Guess what? 82% down, 82% down. See, everything is kind of going down, because I was looking at the AstroSwap launch the other day. We're looking at Wagyu. We're going to touch on those in a second. Is it unique to those guys, or is everything going down, including UniSwap and PancakeSwap? Now, this was very encouraging to the upside, but when the previous low gets taken out, that's not that encouraging. So we've had a big movement to the downside. So the market is panicking. There's fear, there's uncertainty, there's doubt. So people are selling more than usual. So that's one of the reasons. And one of the macro indicators is Bitcoin. So now when we look at the AstroSwap, it's not that scary. I mean, wow, nearly 6 cents. I can't believe it's so low. But when we take it into perspective with UniSwap, with PancakeSwap, with Ardano, with Adax, and we go, okay, I know they did their launch the other day, but the price has been coming down for a while. We had the build up to the price, but this is overlapping wave structure. Now, okay, we've got the benefit of hindsight now, but there's no confidence. This is a corrective wave structure. When there's overlapping waves, if we didn't know that they were launching the DEX, we would actually anticipate another move to the downside. The trouble I had in my head getting around normally with the launch of a DEX is that way that we're anticipating, right? But we had this movement to the downside. But the reason I'm giving perspective is when we look at UniSwap with PancakeSwap, the same thing's happening. When we look at Adax and Ardano, the same thing's happening. So is this coming as a surprise? Because I'm hearing all types of speculation and accusations and everything else. And I'm like, okay, hang on a second. Let's just get a bit of perspective here, people. Get a bit of perspective. So let's just now finish on Wagyu. Wagyu, guess what? Similar. Can't believe how cheap it is right now. But the market is in a panic right now. So also, we just go to all-time high with Wagyu. Let's have a look. It's like 98% down. That's what it says from the all-time high, because we had this amazing surge, the amazing performance with Wagyu when it did its launch. It did its launch around here, and the price was building up towards the launch. And then we had this movement to the upside, a correction, a massive, it's panic buying over here. And then we've had this deep correction over here, and now we've got this another bit here. But, when we're looking at this by itself, it's like, what is going on? Wagyu is a fast DEX, amazing performance on the Valas blockchain. Why is it going down? Look, it's just tokenomics. It's fear, uncertainty, and doubt. It's total market conditions. Again, if we look at Bitcoin, if we look at UniSwap, this is PancakeSwap. Look, similar things. A mature project, $1 billion market cap with PancakeSwap. $1 billion of volume in terms of total value locked in UniSwap. But it's still going down. Look at this last leg over here. If we just go to the last month on UniSwap, we're going to dive into a deeper dive with UniSwap. But look at this. This is on, when was this date? This is on 16th of January. 16th of January, the price has gone from around $18, and it's just been right the way down to around $10, right? Even there is pretty extreme. So, and the reason I wanted to show you this was I'm reading your comments, and people are panicking right now, rightly so. But it's common with all the DEXs and a lot of crypto right now. When the Bitcoin is doing this type of market movement to the downside, it panics pretty much the whole market, and we're anticipating this. However, what I'm anticipating, my thesis for Bitcoin using Elliott wave and Fibonacci, again, anything can happen, but the probability still states that we should see a 6-figure Bitcoin. So really, during this phase, we would anticipate that those DEXs, the big ones, the small ones, will do this. So where the big ones are going to increase by 10, 2, 3, 4x, the smaller ones, we should anticipate just a much higher multiple, 10, 20, 30x. Again, probabilities never certainties, but that just tends to be what happened. It's what happened during this phase here, and it's definitely is what happened during this phase here. There was massive influx of capital in the whole crypto category, the whole crypto markets as a whole. All right, so to finish up, we are going to go into UniSwap. So I'm going to do a bit of a deep dive using Elliott wave and Fibonacci because it's going to pretty much apply to most of them. Right, this was the last video that I did, and what I wanted to do was just show you something, which was to take the data back to here. And I want to show you something on how to do risk management. Even when you're wrong, you can still make money. That's important. That is very, very, very important. So we're just going to delete these lines, right? This was analysis that I did back in, it was July. So it's mid last year, right? Mid last year. And we had no other reason to believe that this looks like a wave A, wave B, and then what looks like forming a wave C structure, right? And this will be more like this here, down here. We can get rid of this. So what I look at, and I want to show this to you. And by the way, when you see what I'm about to show you, if you want to learn it, you can take my free Elliott wave Fibonacci Masterclass. I got a massive discount. I'll have to show you this. Massive discount on my course. If you go to my website, r15finance.com, click on courses. If you don't want to take my masterclass, you just want to buy the course, and goes directly to the website. It's normally $997 for my course. Elliott wave, Fibonacci, we go into detail. Right now, we're doing a stupendous offer. It's £97. You can buy it, you get the whole course. It's phenomenal. But you can check it out in your own time. But with UniSwap, what we're going to do, and what I'm about to show you, is exactly what's covered in my course. We can do a couple of things. At this point in time, I'm taking the data back down to July, right? We know this is not a wave 2 because we've seen the data unfold, right? But at the time of doing the analysis, like we've done with Cardano recently and a few others, we don't have the information, so we can only use the information that we have. So what I wanted to show you in today's video here, and to finish on, is just a quick analysis on using pure technicals, psychology of buying and selling, keeping in mind that markets are driven by fear and greed, right? Most corrections occur, and we can hit the first one, 62 to 78.6%, right? And we've had this move. We always anticipate 3 legs. 1, which is referred to as A, 2, referred to as a B, and then what looks like to be forming a wave C, right? And then as this unfolds, what I look at, if I now zoom in, is I will then measure this wave A, what looks like a wave A at the time, project it from this wave B high, and the two ratios that I want is 62% and 100%. 100% is too low, so 62% is the key ratio that we're using over here. So now we have this very clean cluster of this price zone down here, right? It's a high probability zone. And then this movement to the downside, there's a couple of ways you can do a few different things. But what I'm going to do, I'm just going to unfold the data. Bang. So at the time, I would have assumed, I got a sneeze coming on. My nose is a bit dusty. If I sneeze, I'll let you know. I know it's digital, right? I'll cover my face. All right. So what we're going to do is we're going to do a nice 8. This looks like a 1, 2, 3, 4, 5. So what I would have counted at the time was this potentially looks like a nice wave 1, 2, 3, some type of 4, and a final wave 5 occurring. So what I would do, and I'll teach this in the course, is I would measure wave 1 to 3, project from 4, and a typical wave 5, end of wave 5, often is 100% to 62%, right? It's in that zone. So we're in this zone. So now what I would look for is on the next bullish reversal, we're going to assume the weekly momentum is bullish. When this blue line crosses over the red, I will go to a candlestick chart and I will enter the trade on a 1-bar high. I just want to check if I've got this open. Have I got it open? Yes, I have. So what we're going to do, I'm going to use this. If I've got it open, yes, I'm going to use it. I've added this to my, we're going to use this tool. I've added it to the course. It's going to give us an entry to exit trade plan so we can manage our risk. We're going to use this in a second. All right, so we're just going to forward the data a bit more. So I'm just going to zoom in a bit more. So what we're looking for is when this blue line crosses over the red, which is, we can check it out. We can see, I'm just looking at the numbers. I'm just going to make this bigger. I just want to make sure I've got the 8. Yeah, perfect. We're using the slower indicator on this one. It's a bit smoother. It's the 13855. So it hasn't crossed yet. We're going to wait for one more bar. I'm basically looking at this number down here, this blue and the red number. So when I hover over, we can see that it says 1-1. I'm waiting for the blue to go higher. Bang! We've had a bullish reversal. Now on the 1 bar high. 1 bar high on the swing low. So because we had a really optimistic bar, what we're going to do, we've got a decision to make. We can either go on the previous swing high, which is here, or we literally just go, right, the 1 bar high. If we get a 1 bar high taken out, we are going to enter. So we can get rid of all these lines now. We can get rid of all these lines. And what we're basically saying is this. We know we're wrong in this case, right? But this is where you make money when you're wrong. This is important to know. Because if you understand this, you can mitigate your risk. So what I would always anticipate with a market is when it does a movement to the upside, we're calling that a wave 1. Movement to the downside, we're calling this a wave 2. What we anticipate after a clean ABC correction, but its probability is never certainties, of a wave 3. So the price zone that I would anticipate, and this is where we do our management. This is what separates the amateurs from the winners. Right? We're going to measure this wave 1, and we're going to project it from this potential wave 2 low. And the two numbers that I want is 1.618 to 2.618. We want to be conservative. So this is what I'm anticipating, right? I'm going to go, I'll get rid of this one. This is one I would have done a while ago. Is $80.42. $80.42. What we're also going to say at this time, so let's just write that in, $80.42. I'm going to pull up this here. We're gonna go into the entry and stop loss in a second. We're gonna go exit 2 target. That's our exit 2 target down here, right? We're gonna go. Let me just draw it like this so we're clear on the same page. This one here, right? What do you say? 80. What did I say? 80.42. This is just telling us what's likely to occur. 80.42, right? The other numbers are not accurate yet. We're gonna come back to that in a second. What we also want to do is now get rid of this and say, okay, we are optimistic. Our conservative target is 1.618. That's what we anticipate in our business plan, but there's no guarantees here. But what's the minimum that should occur? And we know this is the case because we're now looking in hindsight, but this is how you manage your position. When you have a 5-wave sequence at the downside, 1, 2, 3, 4, 5, what you should anticipate as the minimum is a 50% correction. I'm going to measure this low to this, so high to the low, and what we want is 50%, right? 50%. We've got the 62 and the 78 as well. These are the typical correction zones. But what we're going to anticipate is a correction. This is what we did with Cadena, right? I'm also, just to make it easier on the eye, just going to pull it to the right. So we got it like this. So what we're saying is these are the minimum zones that we anticipate. So if we're wrong, the market would usually get into the zone before it goes back down again, right? That's what we're saying, right? So now we can say, okay, based on this 50%, to get a ballpark figure on the numbers we can make, is exit 1, we want to look at $22.01. That's what that 50% retracement is. That's what we're going to write here. $22.01, right? That gives us a bit of a feel. But now we want to look at the entry and the stop loss points. So what does that mean? All right, so now we're going to zoom in. So again, very practical here, very, very practical, right? What we're saying in our business plan is after the bullish reversal, on the 1 bar high, we're going to have an entry. And then on the previous swing low, we're going to have our stop loss. So now this is our risk, right? By the way, I covered this in the course, how to do the analysis. But I've added that spreadsheet in the course as well. We're doing a massive discount right now. So what we're going to do is, let me draw it like this. Let me draw it here. What we're saying is this is our potential risk, and this will represent 3%. If your account size is $30,000, 3% is $900. So what we're going to put is down here, we're going to say $14. Let's just minus 5 cents. So let's say $13.95 is our stop loss, right? Stop loss is $13.95, 13.95. And the entry is the 1 bar high. The entry is, again, it's better if I look at this, is 1688. Let's just now just round it up to add 5. I like to have a bit of breathing room, so the market has to really enter us in with a bit of conviction. Is 1693. Just add 5. 1693. 1693. So then what this spreadsheet tells us, it says, Jigger, if you risk to get the proper capital exposure, you need to buy 302 UniSwap tokens at the price of 1393 with that example. The cost is going to be, if I just pull up this point over here, the cost is going to be $5,100. But if the price doesn't go your way and you don't hit exit 1, you are going to sell those tokens at the price of $13.95, and the money that you're going to get back is $4,213, and that is a loss of $900. So we know what $900 is our risk. Hopefully that makes sense. We are going to look to exit 50% near this first zone and 50% near the second zone if it goes our way. It's called trade management, risk management. So our risk is $900. Where potentially, if our 2 targets are met, we'll make around $15,500. That's a 17.2 to 1 ratio risk reward. And if we are wrong and we get stopped out with no exits and no movement of the stop loss, we lose 3%. If we are right with both, we make 52%. We know we're wrong in this case, but I can show you how you would have still made money, right? I believe so anyway, off the top of my head when I'm thinking about this. So we go bang, we're entered into the trade. We go great. Now what we want is to give the market room, either to hit this mark or to make a bullish reversal, bearish, and then a bullish. What does that mean? It means this. Because normally it's at least 3 legs. So we kind of allow the market to move up, allow it to move down, and allow it to move up. I haven't done this scenario. I haven't played it out. But my guess is we'll hit this target from what I remember, and then we can show you how to get risk-free. So if we hit this price target first, or if we go up, down, up, on next bearish reversal, we're going to do some trade management. And ideally, minimize. Maximum we can lose 3%, but minimize. Can we get some profit? Can we get risk-free? Or even make a small profit when we're wrong? So then the market moves up. The momentum goes and boom. We've tagged this, right? We've tagged the 50%. We go, oh, okay. We've tagged the 50%. We haven't made an up and a down, but we have got a bearish reversal coming. So now what we do is what we say. This is just practical, mechanical, non-emotional. We did our analysis in advance. I did a video on this a while ago. I believe I did anyway. And we were wrong. We were absolutely wrong because we said this looks like a wave 2. We had the reaction to the bottom and the market did move up. But rather than saying it's all or nothing, what we're saying is, now what's the minimum that should occur if we are wrong? And the minimum that should occur is actually what's occurred, which is this 50% zone. So we go, great, let's hit the 50% zone. Now what we're going to do is on our first exit, which is half of our tokens, look, 151 tokens in this case, which is half of our tokens, 50%, that's calculated by this number over here. We are going to sell on a 1 bar low. And you can do this with different platforms, sell on a 1 bar low. So what does that mean? So half of our position, we are going to now say, we're going to move to a 1 bar low. Bang. If the price reverses and takes us out, then we would have sold half of our position. And when we sell half of our position, what we're also going to do is one of 2 things. We have to make a decision. If there's this particular pattern, we might not move our stop loss, but normally, traditionally, when you get stopped out in your first, you'll move your stop loss to close or next to break even or on a previous swing low if the swing low is clear. Hopefully that makes sense. But you'll see the visuals. You'll see the visuals. All right, so now 1 bar low. So now let's just go 1 bar at a time. Boom, the market's gone up. This is a particular candlestick pattern, but we're going to go, all right, now we're moving it closer. We haven't been taken out because we don't know what's going to happen. It could shoot up, could shoot down. We don't know. And then we go, boom. Now this 1 bar low, if we zoom in, just move this like this, you'll see that this 1 bar low was taken out, right? Just it spiked it. Hopefully you can see that. If you can see this little spike, this is called a candle wick. We went below here, so we would have got stopped out. Yeah, sometimes it doesn't, but more often than not, it will. So we go, okay, our first exit now on a practical level will be $21.57. So what we're going to do now is we're going to go here and write $21.57. And you have a trade management, you'll log it. I normally just use CoinGecko, the portfolio tool. It's quite easy, it's quite intuitive. And now our stop loss is now moved. When you go, where do you move it to, Jagir? Well, I would at least move it to break even, so we minimize our loss. So we go, right, we entered here. Let's move our stop loss to break even. I'm going to draw it like this so you can just see that there's two lines, your entry and your stop loss. And it will be, what's the 1 bar high? What do we say? Was the entry. So whatever your entry point was, now your stop loss is 1693, 16.93. So what this means and allows you to do now is if we're wrong, why did I do that? Bum, bum. Let me just put it as 16.93. That? Oh, it doesn't like that. It doesn't like that. Let me put it as 1690. Let me put it as 1690. 16.9. Yeah, there you go. Perfect. So what we're going to do is what we're going to say here, exit 2 target is we're going to say, in fact, you know what? Let me do it like this. I'm going to do it like this way. Let's just keep that original risk exposure there. Let's just change exit 2 to 1693. 16.93. What it says is part 2 is going to be break even and part 1 is a profit. So what this tells us, this is really, really important to understand, is now we've exited our first position. Hopefully this is making sense. This is the practical step-by-step guide, risk management. We're using UniSwap as the example. If the market now goes totally against us, which we have the hindsight, we know it's going to because we've got the hindsight. If it does that, what's the numbers? Well, the numbers will say you made this much on your first exit and this much on your second exit. And the summary says you have risked $900. You've made 5,800. So you actually still make 6.5x. So you make 19% on your entire portfolio, even when you're wrong. Even when you're wrong. Hopefully that's making really powerful sense to you that you know, right, if we sold half of our position at a profit and half at a break even. Now, if we did hit a second target of $80, then we're going to make a lot more, right? But you can, this is how to make money when you're wrong. So you make a small profit. This is relatively significant. Small profit, break even, or a small loss. But when you're right, you make a big profit. That's the whole name of the game here. So again, we're going to go 1693. We go great. We're happy with that. And let's just now let the market do what it's going to do. Bang. And what we would have done here, there's a couple of things here. Now, with our second position, you have to make a decision. One of the ways that I would do it is just mechanical. It doesn't mean it's going to optimize the position, but you need to be able to replicate the thing. On the next bullish reversal, if there's a clear swing low, like if there's like a move up and then a move down and then another move up, and it exceeds the previous high, then this here is a clear swing low, and you can move your stop loss to that over here. But we don't have that at the moment, and we don't want to rush, because in this scenario, we got the benefit of hindsight here. It would make more sense if we now said, okay, this looks like a swing low, but for our second position, we need to give it space, because what we're really wanting for our second position, and it doesn't happen in this case, but this is the game that we're playing. You don't know in advance. Is what we're really aiming for is that the market does something like this and then really explodes to the upside. And that's where we make our money. But we're happy getting stopped out or okay, and we accept that risk. But now we're risk-free. We are guaranteed a profit, so it's easier. It's easier. So now what we say is, let the market do what it's going to do. We don't know what it's going to do, right? So we go, yeah, it's looking good. Everything's looking healthy, right? We've got the next bullish reversal now. We have the next bullish reversal. All right, so as the market moves, it's briefly moved up. So in this one, again, kind of giving us the benefit of the doubt, we go, what we would have done here in this real life scenario is we've got a bullish reversal here and here, but more importantly, this price has exceeded the previous high. So because that's the case, we would actually have now moved our stop loss from break even to this swing low, right? Because this looks like an ABC correction of a bullish wave 2. So now The second position goes to $25. I'm hoping this is making sense because I used to do this every single day, especially with Forex. Forex, I used to do it every single day with my positions, very mechanical, very easy, no thinking, just bang, bang, done. And now our position is a potential exit of 7,000. So we go, okay, that's looking much healthier now. This is what we're selling for. We go, great, it's a 7.8x. Okay, that's good. And then we just play out the market, right? We just let it play out. You know, on every swing low, we're just going to measure it because what we're saying is probabilities, never certainties. And what will happen a lot of the time, not in this case because we got hindsight, is the market will move up, it'll move down, it'll move up. And if it did this, we'll just go, right, we want to capture that movement. But when we see a 5-wave sequence approaching our target, then we can tighten our stop loss. But in this particular case, again, if we just zoom back in, right the way here, like this, we'll just go, right, what happened? Again, we're waiting for the next bullish reversal. Boom, boom. And there, you would have been stopped out. Would have been stopped out, done. And now you're waiting for the next trade setup. Yeah, hopefully that made sense. So now your business plan, your P&L would have looked like this. You bought this many tokens with these prices, with this amount of risk. You exit one, half your tokens at this price, exit two with proper risk management, trade management. Even though it didn't hit our target, we still made some decent money, right? We still made like $5 in total on the first one on 302 tokens, and it kind of adds up. It all kind of comes together. So now what we're going to do is we'll just let it play out. We'll let it play out. We'll go, okay, you know, we will need to review the weekly and everything else, but we know with UniSwap, it ended up doing where we are today. And as we review today, we go, okay, this is clearly no longer a wave 2 count because the rule, when you take my course, you'll see that one of the rules is if you know this should not get exceeded, right? This wave 2 low should not get exceeded, and clearly here it has got exceeded. So now we go, okay, the wave 2 looks like this is forming more what's called a complex correction. So we don't need these no more. This just now looks like, if I just do it like this, and then I'm going to wrap up. From a pattern perspective, I like to use the line chart. It just makes it a bit more visual. We go from here. From a time and price, it looks like a complex correction. But now this looks like more of an A, B, and a wave C forming. A 1, 2, 3, 4, and then maybe a 5 where we can have a wave 2. So shall we just finish on this? We'll finish on this. So we're going to loop. And this is the reality of trading, right? It's probabilities, never certainties. But this is why you just get the edge and you trade the edge. And you just rinse and repeat, Keep it mechanical, objective. So look, we're tagging now the 78.6%, which is the typical maximum. We are now also going to measure wave A from wave B. I'm calling this a wave B because we've got a new swing low. And the two ratios, like before, is 100% to 62. And we're still in that 62% range. 100% is quite deep. So we go, yep, we got that. And then lastly, what I would look at here, yeah, it looks reasonably clean. It's more of a sideways, which is saying that the market looks like it's getting ready to reverse. The buyers are getting more strength. Here, what I'm sometimes I get something in my head and I haven't made it clear. So what I'm saying here, the move, look at the angle. It's very steep, right? It's like get out. It's very steep. But here, the angle is almost not as steep, right? So it's like it's almost getting ready to change angles. Doesn't mean it's going to happen, but it tends to be what does happen. So what I'm seeing here is a nice wave 1, 2, looks like a wave 3, 4, and a 5. So now we've got 2 degrees of counts. This is an intermediate count. So we just call this intermediate. This makes it cleaner and clearer. We can do a few other things, but the one thing I want to do is wave 1, beginning of wave 1, end of wave 3 to top of wave 4. Typical wave 5 correction, 62%. So we've got this cluster over here, which tells us there's a decent probability that we're coming towards an end. But the key bit of information, top left, weekly chart. I'm going quite fast, I know. I cover this in my masterclass. If you take my Fibonacci Elliott Wave masterclass, covers the high-level basics and the fundamentals of this. And then if you take my course, I break the lessons down in detail. I personally don't like to go against the trend. So I trade on the weekly and the daily. So the weekly is bearish right now, pointing down. I would like to either see it in the oversold zone or better yet, do a bullish reversal. It's not there yet. So this indicates that 1 to 2 weeks of sideways to down with UniSwap. And then after we do meet that minimum requirement, that's in the trade plan, then on the next daily bullish reversal, so we're not there yet. I think we're probably going to get maybe 3 to 4 days of something like this. And then it'll probably be the next one, the next bullish reversal that coincides with the weekly. And if we are still in this pattern price time zone, then look for your entry strategies, and then it's just rinse and repeat, rinse and repeat. Whew! Yes, we covered a lot there. I know. But, the main thing for today was DEXs, everything is down. UniSwap, PancakeSwap, Adax, Ardano. Then we got AstroSwap and WagyuSwap down. We did a detailed analysis of UniSwap. This psychological movement of buying and selling behavior, speculation, tends to happen over and over and over again. Because some of the tokens are just governance tokens, voting tokens, and they have different use cases and so on and so forth. But a lot of people are just speculating. And when the markets are more optimistic and there's a great project, the money tends to flow in and find the weight of that project, and it tends to drive the price up. But we can only do probabilities and never certainties. And that's the real lesson of today. So if you like today's video, like, subscribe, hit the bell notification. I think it was a bit longer than I was anticipating. We're going to finish in a quote. What's the quote of today, Jagir? It's Confucius. It does not matter how slowly you go as long as you do not stop. So everything is difficult before it's easy. That's clear cut, right? If you're driving a car for the first time, it's difficult. When you're learning Elliott Wave and Fibonacci for the first time, it's difficult. That's why I've created the Masterclass. That's why I've created the courses. That's why I've put I think it's like a 90% discount now on the course. It's £97, cheapest chips. You'll get an invite to my private Telegram. We do private workshops. We do weekend workshops. Community engagement is phenomenal. And we're looking to just help to make sure you got the edge in your favor, and then you can act with the edge. So I will see you very soon.